The bull market is back on as some weaker than expected inflation data has investors seeing green. We'll be discussing that and much more today on Money Never Sleeps. Thanks for joining us today, everybody. As we get going, do us a favor, hit that like button, subscribe to the channel. Remember, nothing we say is financial advice. Please do your own research for making any buys or sells. Kev, good morning, buddy. We got some PPI data yesterday that had people feeling a little bit bullish. We got some CPI data today that has the market feeling extremely bullish. Bitcoin just topped 100K for a hot second. The alt market is rallying. We have risk on in TradFi with the NASDAQ up almost 2.5%. The VIX is taking a beating. The dollar is moving down. Nothing makes sense. Oil prices are rising. Gold, I don't even know what to make of all of this, but how are you doing today, buddy?
Doing good, except for the fact that, we can have AI doing all these crazy things, but for some reason the internet continues to be a bitch for us when we do this show. So if I do go in and out, that's what it is. I probably can't share my screen today, but we can still talk about things in theory because this is pretty important what's going on in the market right now. You're seeing a lot of conflicting signals, right? And we saw a major VIX crush today, which we kind of expected. I did expect that we were going to see a rally into OpEx today, and we are starting to see that. The question is how long will this last? And from the setup that I'm seeing, and also from someone on Wall Street who made a very bold claim about closing the gap on January 13th from the election, I think it's honestly coming back to February. Maybe it's February 2018, maybe it's February 2020, but we are in a very much similar scenario for volatility to be kicking up very soon. After this OpEx, either it hits before February or it hits right after the February OpEx. It's going to be so fun these next few weeks because I don't think this market's going to go much higher. I think we're bullish today, we're bullish tomorrow, bullish Friday, but after that, I would say it's kind of a tricky place to be navigating.
Yeah, let's kind of run through some of the data that we got earlier this week. Tuesday, producer price index came in, and year over year, it was below previous readings. Last month, it was 3.5%. This month, 3.3%. So people feeling good about that. Then when we look at the CPI, we have the year over year number unchanged it met expectations. Everyone was expecting 2.9. It came in at 2.9, higher than the 2.7 from last month, however. But the core CPI number is what got people excited, 3.2%, below the 3.3% expected, leading a lot of analysts, a lot of people in the markets to believe like, hey, maybe inflation is coming down. Maybe we will see some rate cuts at some point this year. Looking at the futures, the rate decision for January didn't budge. It's going to be a pause. The March meeting, a little movement toward there being a 25 basis point cut, but the expectation is still no cut for that one. When we move ahead to May, however, there was quite a bit of movement there, as now it's once again forecast about a 38% chance that we'll see a rate cut, but that can all change. People are feeling bullish. Yeah. They're seeing maybe some progress is being made. What did you kind of think of, besides the fact that we're going to get revisions, what did you think of the data overall?
We're going to get revisions. I know, besides that, but this is exactly what I expect. We're not gonna spook the markets too much before Biden leaves office, right? You're not gonna leave the markets into the bad taste in their mouth. It's OpEx. It's one of the most important OpExes of the year because it's kind of setting up what we expect moving forward. It's also kind of getting out some of the kinks in the system from.
Well, there goes Kevin. So that's fun. Gonna give him a minute to see if he can join us again. Otherwise, we may just be wrapping this thing up early. Been having some StreamYard issues as of late. Like we said, market's responding favorably. Looking across the board right now, we're seeing a lot of green, especially when it comes to the Magnificent Seven, Magnificent Eight. Kevin, welcome back.
You know what it is?
What is it?
I think StreamYard doesn't want us to tell you guys what's probably going to come in February. But yes, you were what we were saying before I dropped off was that this is just kind of what we expected, right? The markets are really good at keeping things up until the OpExes, and then obviously afterwards, once their positions, the option traders are in a place where they're in the money, out of the money. They've exercised any options that they need to. Then you start to see the market kind of kick back into what might be the momentum for the next few weeks or months. So with what happened today, this was literally the justification for why we got the market to rally pretty hard here. We can look for the answers after the market starts rallying, but to be honest, it really does come down to some of these settlement dates, Friday being a big one. So that's why I'm not surprised that we're rallying here. Again, I do believe it's going to be short-lived, and I think I do have my charts able to go now. I kind of fixed my internet, so that's good news on that front.
All right, let's take a look at that.
Yep. So what I'm pulling up first is the S&P, just because I want to take a look at the indexes. And this is the fun part, and this is why I think this, I definitely called it with this head and shoulders. We closed that gap. I don't think we're done yet. When we're looking at the S&P right now, there's a lot of shit going on here. We know that's a head and shoulders right there. Let's remove that. But what we're looking at here is another gap that we created this morning, right? Between 58.73 and 59.04. Now, I don't think tomorrow is going to be a red day. Just my opinion. It might be flat. It might be red maybe a little bit, but it's not going to be considerable. I think what we're looking at right now is that we're going to push a little bit higher, possibly to, I would say between 6,052 and 6,019, kind of these two tops that we got here. I don't think we're going to put in another high. I think the market top was back here when Trump rang the bell on Wall Street. I think that was like early December when we got that. And from looking at that there, the interesting thing that we kind of have to keep in mind is the Bollinger Bands are tightening up right now. This is on the daily, right? So we have a little bit of a short coil on the bottom of the stochastic RSI. There's plenty of room for us to push up here. We're seeing that volume is decreasing as the price is going up. That's kind of the, not manipulation, but that's kind of the funky stuff that happens in the markets that get you excited that, oh, this is actual price discovery. We'll get to that when we get to GameStop as well, because something very similar is happening there. But I think this daily stochastic RSI is just going to start to get overbought. Might be overbought by Tuesday of next week, right, on the open. Doesn't mean that Tuesday is going to be a great day. Just means that we're going to get to that overbought territory fairly quick. And as we see these Bollinger Bands kind of get closer and closer, we can expect a violent move. I don't expect that we're going to be going up higher than the all-time high already for the S&P. That's my opinion. I think that's also just kind of how things have played out in the past. When you do expect some type of correction in the markets, you tend to get them in like towards the last few weeks or months of Q1 and also into Q3. You don't necessarily get major corrections in Q2 or Q4. So us getting through the first month of the year, waiting until we get a new president, and now we have a lot of things lining up for the OpExes and, the end of Q1 on the horizon and the end of March. It kind of makes sense that we're looking down, not up in this scenario. So I think that we are going to continue to rally. We're going to find some resistance in this range right here. We can put a line right over, just so we can keep in mind what's technically possible to get a rejection on. And it's very possible that we push up another 50 points, 60 points tomorrow, and that's the top. And then Friday, we have a bit of a sell-off. Not much, but kind of flat sell-off. That's one thing I'm looking at here. I mean, you can kind of see this across the board, too. Everything is rallying extremely hard today. The Dow is up almost 800 points. This is, again, very dangerous. We have to be very careful here going into next week. Look at this. The Bollinger Bands right here are coiling up on the Dow. You might get a bit of a crash, and maybe it starts next week and you start getting some of the sell-off, but I think that there's a good chance that we have some type of Volmageddon once again. And the S&P and all these Bollinger Bands kind of tightening up, coiling up, tell me that there's a good chance that we can get that. Last time that we got Volmageddon was in 2018, but we also look back to when we saw a major volatility spike, February of 2020. It tends to come right around that OpEx. So we're going to continue to be, cautious around there. Pulling up the VIX right now, we talked about how the VIX broke out too early, in my opinion, and it would crash, and it is. It's down at 13, almost 14% today. I think you're going to retest some of these low levels, and then from there, there's a good opportunity for us if we stay above, this top trend line. Maybe we're looking at something pretty similar to what we saw back in August, where we saw the VIX shoot up to 65, almost 66. And, if we look back throughout history, we've had some major moves in the VIX. The pandemic crash got us all the way up to 84. If we look at Volmageddon, which was 2018, that got us to roughly 50. So are we looking at, possible 2.5 to 3x, maybe even 4x in the VIX? I would say that it's very possible based off of what we're kind of watching develop at the major indexes. I know I'm talking a lot right now. I'm trying to get my thoughts because my internet's like going in and out. But that's kind of the base case that we're looking at right now. February is going to be a very important month, unless it begins in the end of January. Everything changes after Friday. That's kind of what I'm looking at right now in the markets, and we have to be cautious with.
All right, let's look at crypto, because we are seeing, getting back to, I think, some really key levels here that will determine if we're going to continue to push higher or get rejected off of them. So let's start with Bitcoin, and we can see this like upper part right here. If you look at this trend line of, can we get above, can we get to 101, and can we hold above 101 and close above that for a day? I don't know if we'll get there today. I mean, it wouldn't shock me with the move we've seen so far, but what are you looking at for Bitcoin as far as also, sending some warning signs for the other markets as well?
Yeah, absolutely. So I think there's two scenarios, but the tongue-in-cheek scenario is that we have a crypto ball starting on Monday, and how could that be bearish for the market? Jokes aside, I think what we're taking a look at with Bitcoin here is, what you don't want to see is rejection of this, right? Or you break above it and then you get rejected right after, because then we're looking at, we broke down to about 89K last time we got rejected from this. We have a really strong move up again. I think this is the OpEx effect being so important this go around, at least the beginning. Probably will be the most successful OpEx of 2025 Q1. I can't say that anything for February, March will be, where a lot of calls are in the money, but this is definitely good for a lot of people who have calls. The dangerous thing though is you tested this level here at 91K and you lost it once. If you test it again and you lose it again, obviously we're going to 200 moving average, which is about 79K, right? And if we look at where that takes us from where we currently are, that's 21%. So that's a pretty big move down. It's 1/5. The thing that's you kind of have to wonder is, what scenario are we playing into for a market correction? Are we looking at something that's more like a 15% correction in March, summer bounce, and then the major drawdown is in Q3, so it's like the 2008 scenario? Or are we looking at something similar to 2020 where it's just like 40% down in a matter of 2 weeks because of some black swan that we don't know? I'm going to go with the first one, being that it's the 2008 scenario. We get the pullback, we get the summer rally, and then we get the major crash later on in the year. If that's the case, then that 200 EMA should hold. That would be my expectation. If it's the major crash, then I think that we're probably going to see this break, and we're going to get a pretty close to all-time high, if not new all-time high. The reason I kind of also entertain this idea is because if I look at XRP right now, you did break out of this and you are pushing up higher. I don't know how long or how long this can be sustained for, this break above the high that we got here in December. But if it continues to go up, then I think it's more or less just sucking in a lot of people into this market. Maybe this is kind of what we can expect from Bitcoin. I'm not convinced that we're in an alt season yet. I think that there was a good dip to buy somewhere on that recent pullback. But I think that for what we're seeing here, if this is mirroring what we're going to see in Bitcoin, is we could see it break up higher. But again, that also concerns me for what we can expect later on in Q1. But for crypto for right now, it's kind of a weird thing to see crypto with TradFi, because I expect things in TradFi that I don't expect things in crypto. But I also have to train my mind to think like, crypto is not decentralized anymore. It is an institution of Wall Street. There is institutional money behind it. Anything can go, right? It could totally just go together with TradFi, hand in hand. Unless some big player in the market like Sailor or Tether gets knocked out of it, I don't see that decoupling yet. There's just too much money in the markets now. We look at the market cap of Bitcoin. It's almost $2 trillion, right? It's not small. I mean, this is arguably, this could be a Mag 7 stock. There's a lot of companies that are in the trillions. Bitcoin could be one of them, right? So that's the dangerous part of looking at this. I still think that there is a major retracement coming for Bitcoin, because I expect a major retracement in the markets entirely. I just don't know what happens, and we kind of just have to take it day by day to see how does that impact something like Bitcoin now that is so, entrenched in TradFi itself.
All right, let's look. We can go quickly through these. Let's look at ETH and Solana, because alts are on a nice run. Those are, two of the top ones. And then let's finish with GameStop.
Yeah, sounds good. Looking at ETH right now, you're above the 50 moving average. Look, the daily stochastic RSI has room to run. I see the reason why people are bullish on an alt season. We're just going to draw lines for right now, see what we have to break in order to, confirm or deny whether we're in that scenario. You probably have to break about 35, 3600 for ETH for it to be somewhat bullish. If you break above it and then you retest and you stay above this trend line and you start pushing up, obviously it's a bullish breakout, right? The retest would be the important part. If I look at this on the weekly, though, if I'm not mistaken, you're testing the 50 moving average. If you do get another pullback and you're not able to break out of this, then you're probably testing the 50 once again. And if we're looking at Bitcoin to see where it was and where the 200 is, that's roughly a 34% pullback for ETH. I could see that happening given market conditions. That's just something that we're taking a look at. There could be a time, between this week and when we actually see some type of correction in the markets where this breaks up a little bit higher. If that's the case, then you're going to have to break 4,099. So you'd have to see, let's say, if you break out of here, maybe you go back to it. Maybe you break out of this white trend, trend line that's going downwards that we're testing right around here. You break out, and maybe we find our top somewhere around 4,000 once again, as we've seen in the past, back in March, May, December again, and then maybe once again. That'd be a 1, 2, 3, 4 of 5. What is that? A quintuple cup or a top or something like that? I don't know. That doesn't happen often. But that being the case, resistance probably is going to hold once again, and then we see that retracement. So targets to look for, 4,000 if you break out of this downward trend line, and then obviously the 200 moving average, which is 22.53. So pretty good span of $1,800 or so between the price targets. It's going to be volatile. I think it's going to be fun, but if you're doing this stuff with leverage, Godspeed. Looking at Solana here, this is going to be fun as well, because you're just kissing this trend line. They're all doing the same thing. I mean, very few are breaking out. And by very few, I mean just XRP as of right now. But you're finding resistance on this trend line. You broke above it, and then you broke right back under it. Not necessarily a bullish site, but you did test the 200 EMA on the daily. If we look at this on the weekly, though, let's see where we are on the 200 EMA. You're extremely overextended. 200 EMA is all the way down at 92. So let's say the 34% that we're seeing in Solana, let's pull this back 34% from where we currently are. That takes us about 129 or so. I believe that's a good level of support. Obviously, that makes sense too, considering where we were, bouncing back in April of this year. So we got the breakout in September. This is going to be one that we'll watch. We'll watch that 129, let's say 130 for the time being, and see if this is where we retrace to, if there is a correction. But if we're able to break out of this, you're going to want to see a back test and then push up. Maybe you push up a little bit higher, maybe a new all-time high. But, like this is the weekly. Let's look at the daily. You're already in the direction to the upside. The question is, though, when the weekly, we look at the stochastic RSI on that, you got low volume. And the other thing is that you're already oversold. What's to say that, that 34% drop that we have in a matter of, 2 days, 2 trading sessions, isn't just going to keep us oversold for a period of time. Maybe the bounce comes after March or at some point in March when we bottom out, but I just don't necessarily think that, this 50 moving average here at 160 is going to hold, especially since the momentum of the market is probably going to be a lot stronger. And I think alts will probably be a lot more volatile than Bitcoin itself. Outside of that, I don't have too much on any other altcoins. I think everything's going to kind of follow the same. 200 moving averages are going to be very important to watch. And then if we look at GameStop real quick.
And Bitcoin's on a nice little run here.
Yeah, I mean, it makes sense, right? The thing is, we want to see how it performs after Friday. Monday, interesting enough, the inauguration, that might be some volatile movement for Bitcoin. Again, closed market. However, it's still going to be a lot of people speculating. Everyone's excited about this crypto ball, man. I didn't register, so I'm not going.
Yes, I will also not be at the crypto ball, but crypto market doesn't close. I mean, if he mentioned, like, listen, if he in his speech, Trump mentions Bitcoin or something, I mean, look out.
Oh my goodness, what do we get ourselves into? But looking at this right here with GameStop, the reason I want to bring this up is because we had a really bad day yesterday off of low volume. I believe it was earlier in the day, it was $4 million or 4 million shares traded. I think later by the end of the market, it was 11. So it was no volume when it started to crash, and by the end, it picked up a little bit. But I'm not necessarily sold on it right now. Today, 5.14 million. It's very low volume for a stock that is extremely volatile. The reason why we're seeing this is because a lot of institutions, and we saw that Ken Griffin Citadel is trying to raise $500 million by a sale of bonds. Are we concerned about liquidity? That article comes out next day. GameStop's down 10%. We do have a short sale restriction today. However, the price is still down, not necessarily moving up where we should get a bounce off this trend line. I think it's going to stay like this going into OpEx, is because what are they doing? They're selling call options. They're selling call options. And at that point, you're just not seeing the bullish momentum. You're continuing to see a manipulation of the market. Do I think is it illegal? No, not at all. But is it manipulation of price off of low demand? 100%. So what we're seeing here is them trying to push this down before OpEx. Max pain is $25 a share. Do I think it'll get there? It's possible. I think that there's a good chance that this pulls back considerably in the next month or so because of what I expect in the markets with a 10 to 15% drop. Best case scenario. If that's the case, then though, there's going to be a lot of buyers at some of these levels, like $25 or so at the bottom of this trend line. If it holds, you're in a pretty big move to the upside, in my opinion. I think this is going to break up, and maybe it doesn't come till closer towards that Roaring Kitty date of April 20th, so the April 17th OpEx. But the important reason I'm staying with this, and I will not give financial advice, but the one thing I think is going to be really crucial to kind of survive in this markets the next few weeks and months is not fucking around with options, because there is so many people that are just absolutely just changing the price of things and manipulating the markets through options, through net call premiums going up, selling calls to keep the price suppressed. It's just your best bet is probably spot. And I think people who are holding spot in GameStop right now are feeling pretty good because they're just going to buy lower and it's going to bounce at some point. You look at the daily stochastic RSI, it's 0 and 14. That's a major, level of maybe this is bottoming out somewhere around here. We won't necessarily know till probably mid-February if this does bottom or if we are going to go a little bit lower. You got the 200 moving average right down there at 23. This could pick up the next few days, and we get to the point where it's like it meets right here, this the bottom trend line, and then we bounce from there, and it's a breakout. But some of the targets that we're looking at for GameStop continue to be $48 a share. You look up higher, you're looking at 65. There's one at 78. There's one at 95, and there's one at, I believe, 120. So there is a good room for short demand. And the other thing too is they continue to short shares. There's going to be a point where none of the people who are holding spot are selling. And if they start exercising some of these options that are at calls at the lower strike prices, there's going to be more demand. It's going to be a rush for shares, and you're going to start to see these prices increase naturally. This is going to be a fun short squeeze. I think we are going to see it. Just a matter of time and patience, and not getting frustrated. So again, GameStop right now probably not, it's a dud this OpEx in my opinion. But moving forward, if you are holding spots, I think that there is the case that we could see, some fireworks. Outside of that, too, just because I'm playing both sides of the field, I think that we are going to have a bullish bounce at some point. We just have to wait and see how this correction plays out in the next few weeks. Let's look at the box score real quick. Let's look at the reverse repo. It's down 23 billion. So they're draining that facility. And then remember, we have 3.35 billion left in the bank term funding program. If this thing goes closer to zero by this week, then you kind of know that we are going to see some type of significant flash crash in the markets. That the central banks have just kind of pulled liquidity from the banking institutions. You're getting this kind of rally right now, but that's very similar to what we've seen in 2020 as well. So it's kind of my base case looking across the board. I think that we are going to see a flash crash in the markets. Maybe bottoms out in March, right around that OpEx, but then from there on, going into Q3, we could have a bit of a summer bounce that's better than the one that we are seeing now. That's also the case from the guy who called the January 13th bottom for when the election gap would be filled. He's seeing the same things. I agree with that scenario. And again, that is if we don't get some type of 1929 scenario where markets crash 40+% in the next few weeks. If it's 10 to 15, look to Q3 for the major crash.
Oh boy. All right. That is going to wrap it up for today. Appreciate those of you who are watching this back. We'll be here on Friday to close out the week. OpEx, getting ready for the weekend, maybe a little bit more data. Who knows?
Last party for Joe Biden's trading day.
Oh, God. All right. That's going to do it. If you haven't yet, hit the like button, subscribe to the channel, drop a comment, whatever you want to do. Appreciate you being here. Stay safe in the markets, and we will see you on Friday.
Take care, everyone.